This week's going to be a very important week for the stock market and the economy, and the most important number coming out this week is April's CPI inflation metric. Right now, estimates are it'll come out 3.4%, which would be lower than the 3.5% year over year from last month, and then the month over month is estimated to be 0.3%. So if it's in line with estimates, I think that'd be a good sign. If CPI inflation is obviously hotter than estimates on either year over year, but more importantly, month over month, because month over month is a leading indicator of how inflation's happening now. If it's hotter month over month, especially, I think the markets could potentially go down a little bit or consolidate and trade sideways for a little bit longer. But obviously, if inflation's better than expected or as expected, that could possibly bring back the hopes of Fed rate cuts this year and increase the odds of a September rate cut So we also have retail earnings from Walmart and Home Depot this week. We have retail sales numbers. We also have PPI inflation, which is producer price index inflation, or the inflation that businesses face and their input costs. So that'll be very important. So there's a lot of economic data coming out this week, and Jerome Powell is also having a speech on Wednesday, and numerous Fed governors are going to speak throughout the week in terms of their opinion about the markets. We had Austin Goolsbee and Neil Kashkari speak on Friday on CNBC, pretty much saying that their bias right now is just to wait and see how the data comes in, pretty much keeping rates as is for a while because they're in no rush to do anything right now. Obviously, their bias is more towards cutting than hiking, but they were saying they wouldn't rule out that possibility either, although it seems very, very small. And that's similar to what Jerome Powell said in his press conference a couple weeks ago, that it's a very high bar to continue to hike again. It seemed like he would rather keep rates as is for longer, just to wait for more data to come in to see the direction of inflation. Their bias obviously is still to cut. So we just need more economic data, including Wednesday's CPI inflation numbers, to hopefully show us that the Fed is on the path to deliver a rate cut this year. Let's see what happens. There was an interesting note that came out this weekend also from Ed Yardeni. He was pretty much saying that baby boomers right now are pretty much paying off their mortgages and have paid for their kids' college tuitions. And since they're the richest generation right now and pretty much for all history, they're going to spend that money in retirement. And that consumer spending should help the economy in the next 10 to 20 years, because consumer spending is a big component of GDP. It's about 2/3 of the GDP equation. So with retiring baby boomers now spending their nest eggs and helping their kids get settled, that's going to be a strong tailwind for economic growth. Obviously, in addition to AI, artificial intelligence, and the productivity gains from that. So I'm still pretty optimistic with where the economy is going to go in the medium to long term. Obviously, inflation might be stickier than we expected, but let's see how it plays out. Hopefully, Wednesday's CPI inflation reading comes out at least as expected.